The price of crude oil now is insanely low, like never before in history. Actually, 20 years has happened, but it's happening right now. I will talk about why the price of crude oil falls dramatically later, but for now, we want to buy and store them. In case if this goes up to $100 per barrel in later years, we all could have been millionaires. Yet, in order to buy crude oil, I mean the paper crude oil, the digital paper crude oil, this has to be done all on digitally. Of course, the simplest and the best way to do is to trade through a broker. If you are new to trading, finding the right broker can be like someone inexperienced trying to trade professionally at start. Not the best idea. In this video, I'll be sharing 3 best brokers you should trade crude oil with. Before diving into the content, I want you to know some of the facts that could possibly influence the profit on your trades. Spread is the price differences between buy and sell most brokers offer at the rate of 3 pips. If you're a trader that buys and holds for a long period of time, spread isn't going to affect much on your trade. But if you're a day trader, then you should go for a broker who offer 1 to 2 pips. Overnight fees. Some brokers charge high fees for holding buy position overnight. Their objective is to prevent you from making money. Spots and futures. Though you are trading oil, but spot and futures are different. Futures are traded in a monthly contract where there's an expiration. Usually when you trade futures, you don't get charged for overnight fees from your broker. Spots doesn't have an expiration, the prices are different from futures, but you will get charged for overnight fees. Let's start the list. IG.com. IG is a popular brand especially in the West, regulated and trusted across the globe. They are among the least number of brokers that accept US traders. These sites serve over an estimate of 18 million visitors per month and claim to have over 178,000 clients worldwide. I find their platform insanely confusing and tough to use. If you ever trade Forex for the first time, you better get a demo account first. The trading instrument is wide and they offer many different ways to trade like options and knockout, which I don't have a clue about. Let's take a look at the WTI US crude oil. Now you may notice the price differences between the actual one, which should be priced around $20. This is a spot market, WTI crude oil spot price, which is different from futures. Spot does not have expiry. You're seeing May 20 and June 20 here. May 20 stands for May year 2020 crude oil futures and June 20 stands for June 2020 US crude oil future. They both have a different price. If some of you folks don't know what's the meaning of future, simply put, it is a price bidding of the goods. The price gets finalized when the contract ends, and the finalized price is the market price producers take measure to sell their goods. So if you don't notice the drop down menu, you will never know the differences between them. As I said earlier, it's insanely confused and tough to use. The spread of crude oil they offer here is not static. It could spike up to 10 pips, but most of the time it will remain 2.8 pips. The margin requirement for crude oil changes from time to time. The guides here aren't really true, so take it as a grain of salt. You are seeing different currency symbols here like £1, 1 Aussie dollars and 10 US dollars. Ignore the currency symbols, that's not important. As you switch to different currency symbols, the minimum contract size requirement changes too. If you happen you want to buy in a small amount, you can use this trick, but again, the minimum contract size requirement changes from time to time too. If you want to buy and hold crude oil, go for spot market. Futures get expired without auto renewal. IG is a popular platform with big bill trading here. You could have less worry with your money being held with this company. Plus 500. This is another popular brand that most crude oil traders prefer. It is authorized and regulated in different jurisdictions around the world. Unlike IG, Plus 500 serves over an estimate of 7 million visitors per month. This trading platform is much simpler and clean compared to IG. They have a competitive spread at the rate of 2, but they don't really entertain scalpers, which are traders who open and close trade in a short period of time for small profit. The price of crude oil here is shown based on futures, not spot. They modify the rules here a little. Unlike most brokers, trading futures do not require an overnight fee and will expire when contracts end. Plus 500 offers an automatic rollover when contracts ends. Say May contracts ends at the price of $20 and June start at $30. Your equity will remain the same, but the existing price gets reset and starts at $30. The minimum contract size allowed to trade on crude oil is 20 units or 20 cents per pip. The leverage is 1 to 10. The overnight fee here is extremely cheap compared to other brokers. Plus 500 is a recommended broker. They also have a deposit bonus. I remember it was 20% on the first $1,000 deposit. But if the spread gap happens on every ending contract, this is a painful process for traders who buy and hold for a long period of time. AvaTrade. This broker is the least popular among those mentioned earlier. AvaTrade is regulated in various financial bodies globally, including the European Union, Australia, Japan, South Africa, and the British Virgin Islands. They serve all an estimate of 350,000 visitors per month, but claim to have 200,000 registered traders pick them as broker. Skeptical. Crude oil is traded at a spread rate of 3. The trading platform looks similar to Plus 500 but with a darker theme. Futures are offered an automatic rollover. Clients do not gain or lose due to difference in price difference between the old and new contracts. You are required to pay for the overnight fee and the cost of the spread, which is 3 but should be higher than that. That's to close the old contract and open a new one. Of these 3 brokers, my best pick will be IG.com. In terms of flexibility, they offer 3 trading options, which is spots and 2 futures. In terms of reputations, they score the highest amongst the 3. In terms of buy and hold, they offer spot, which contracts and has zero influence despite the spread gap. But be warned of the complexity of the platform. It is very confusing for beginners to start doing trade with. Like, why start wandering around with a demo account first before dumping real money in? A bonus, all 3 brokers provide negative balance protections in case if the market goes against you in spite. Instead your account going to negative balance, all 3 brokers will reset your balance back to 0. I hope you like my video. I've also included my referral link in the descriptions in case you want to be referred under me. Thank you. If you happen to have any questions, let me know in the comment box. Good luck and happy trading!